The U.S. presidential election is one of the most critical events in the global political landscape. As the world's largest economy, decisions made in the U.S. have a profound impact on global financial systems, markets, and even currencies. Historically, major economic shifts often accompany changes in leadership as new policies and priorities emerge. Investors, businesses, and global governments closely monitor these elections to predict economic policies that could affect trade, finance, and the stock market. During election years, political uncertainty often leads to market volatility. Investors react to potential changes in regulation, taxation, foreign policy, and economic strategy. In addition to traditional markets like stocks and bonds, the cryptocurrency market has become more susceptible to these political changes. As digital assets like Bitcoin gain more mainstream acceptance, their prices are increasingly influenced by political events, especially in the U.S., where regulations could either restrict or promote crypto growth. Bitcoin, in particular, has been seen as a hedge against uncertainty. Its decentralized nature makes it appealing during periods of political unrest, economic instability, or government intervention. When there is uncertainty regarding the future of traditional financial markets, many investors turn to Bitcoin to preserve their wealth, pushing its price higher. With the upcoming U.S. election, Bitcoin's role in the financial system may be further tested as voters elect leaders who may either support or oppose cryptocurrencies. This video will dive deep into the intricate relationship between the U.S. election and Bitcoin prices. We'll explore how past elections have affected Bitcoin, how various economic policies could impact the crypto market, and what the future might hold as the political landscape shifts in 2024. By understanding this dynamic, you'll gain valuable insights into how to navigate the upcoming election and its potential effects on your crypto investments. 1. Bitcoin and political uncertainty, a historical perspective. 1.1. Bitcoin's role as a safe haven asset. Bitcoin has often been compared to gold due to its role as a store of value and a hedge against inflation. Investors turn to safe haven assets like gold and, increasingly, Bitcoin during times of economic or political instability. Safe haven assets tend to hold or increase in value when the stock market, fiat currencies, or government policies face unpredictability. Bitcoin's decentralized structure ensures that it is not directly affected by decisions from any single government, making it attractive during election seasons when political change is on the horizon. Political uncertainty creates an environment where traditional markets fluctuate due to expectations of economic reforms, new policies, or potential crises. Bitcoin, due to its fixed supply and global nature, offers an alternative investment that is not directly tied to any national economy. During elections, especially in countries like the U.S., where leadership changes can lead to wide-reaching policy shifts, Bitcoin becomes more appealing as a means to hedge against the unpredictability of government-controlled assets like fiat currency. The demand for Bitcoin rises when confidence in traditional financial systems declines. The U.S. election often introduces such uncertainty as differing economic platforms from the candidates lead investors to rethink their strategies. Bitcoin's value is influenced by this demand, and past elections have shown that as political uncertainty grows, so does the interest in Bitcoin. Investors looking to diversify their portfolios during tumultuous times see Bitcoin as a viable alternative to traditional assets. Overall, Bitcoin's status as a safe haven asset solidifies during periods of political transition. The decentralized and global nature of Bitcoin provides an appealing alternative to those seeking to minimize exposure to government policy risks. As political uncertainty builds around elections, Bitcoin becomes a financial refuge for investors anticipating market volatility, positioning itself as a staple asset during such events. Previous U.S. elections and Bitcoin price movements. Looking at previous U.S. elections, Bitcoin's price has shown notable reactions to political outcomes. In the 2016 U.S. presidential election, Bitcoin's price increased significantly both during the election process and after Donald Trump's victory. At the time, many investors were unsure of what Trump's presidency would mean for the economy, which led to a rise in alternative assets like Bitcoin. The growing concerns over future economic policies and the unpredictability of global trade under the Trump administration pushed many toward Bitcoin as a hedge. Similarly, during the 2020 election, Bitcoin experienced another price surge as the race between Joe Biden and Donald Trump escalated. The contentious election, coupled with the economic impact of the COVID-19 pandemic, led to even more uncertainty. Investors feared instability and inflation due to the economic challenges caused by the pandemic, leading to a significant Bitcoin price rally. Bitcoin's upward movement in the aftermath of Biden's victory reflected broader market sentiment about fiscal stimulus policies and concerns about inflation. The volatility of Bitcoin during election periods is not solely tied to the candidates, but also to the overall market sentiment and the broader economic climate. Election years often coincide with market instability as traders attempt to predict the future economic landscape. These shifts in sentiment directly impact the price of Bitcoin, with many turning to it as a hedge against risks posed by new leadership and its economic direction. As more investors buy Bitcoin, the demand increases, driving the price up. In summary, historical data suggests a clear correlation between U.S. elections and Bitcoin price movements. As investors look to protect their portfolios from the unpredictable consequences of political transitions, Bitcoin's price has shown significant movement. Understanding this historical pattern is crucial for anticipating future price changes as we approach the next U.S. election. 2. Economic policies and Bitcoin prices. The impact of U.S. economic policies on Bitcoin. U.S. economic policies play a critical role in shaping the value of Bitcoin, especially as the cryptocurrency market becomes more integrated with global finance. When new administrations take office, they often implement fiscal and monetary policies that directly impact inflation, interest rates, and market confidence. These policies, in turn, influence investor sentiment toward Bitcoin as they assess the future value of fiat currencies and traditional investments. Expansionary fiscal policies, such as increased government spending and stimulus packages, tend to weaken the value of the U.S. dollar. This can drive more investors toward Bitcoin, which is often seen as a store of value during inflationary periods. Bitcoin's fixed supply and decentralized nature make it an attractive alternative to traditional currencies, which can be devalued by inflationary policies. As a result, when an administration supports spending that may lead to inflation, Bitcoin's price often rises. On the other hand, contractionary policies, such as reducing government spending or tightening monetary policy, can strengthen the dollar and reduce inflation. In such cases, investors may move back to traditional assets, causing Bitcoin's demand to drop. However, Bitcoin has shown resilience during these periods as well, particularly if there are concerns about other factors, such as increased regulation or geopolitical tensions. The relationship between U.S. economic policies and Bitcoin prices is complex and depends on a variety of market factors. Ultimately, the U.S. election is critical in shaping these economic policies. Investors and Bitcoin holders alike pay close attention to the economic platforms of the candidates, as their policies will likely influence the future of Bitcoin's role in the global economy. The upcoming election will have significant implications for Bitcoin prices, depending on the economic direction the next president chooses to take. Federal Reserve decisions and Bitcoin's value. The Federal Reserve, as the central bank of the United States, plays a pivotal role in the country's monetary policy. The Fed's decisions on interest rates, quantitative easing, and money supply all impact the value of the U.S. dollar and, by extension, Bitcoin. During election seasons, changes in the leadership or policy stance of the Federal Reserve can lead to shifts in Bitcoin's value, particularly as the market anticipates how the central bank will respond to new economic challenges. One key factor is interest rates. When the Federal Reserve raises interest rates to combat inflation, traditional investments like bonds become more attractive, reducing the appeal of riskier assets like Bitcoin. Conversely, when the Fed cuts interest rates, as it did during the COVID-19 pandemic, the dollar weakens, and investors often seek alternatives like Bitcoin to preserve their purchasing power. As we approach the election, many investors will watch for potential changes in Fed leadership, which could signal a shift in monetary policy. Quantitative easing, where the Fed buys assets to increase the money supply, has also had a significant impact on Bitcoin. By flooding the economy with liquidity, the Fed increases the risk of inflation, leading more investors to buy Bitcoin as a hedge against currency devaluation. The election will likely shape the future of quantitative easing, depending on how the next administration views inflation control and economic stimulus, making Bitcoin's price highly sensitive to these developments. In conclusion, Federal Reserve policies are closely tied to Bitcoin's value, particularly during election seasons when political uncertainty may lead to shifts in monetary policy. As the U.S. election approaches, Bitcoin investors will keep a close eye on any indications of changes in Fed policy, as this will directly affect Bitcoin's appeal as an alternative asset. 3. Regulatory concerns and their influence on Bitcoin. 3.1. Crypto regulation and election platforms. The regulatory environment surrounding cryptocurrencies like Bitcoin is a critical factor influencing their price. The U.S. election often determines the direction of these regulations based on the platforms of the candidates. Some candidates may advocate for stricter regulations aimed at protecting consumers, preventing fraud, or minimizing the use of cryptocurrencies for illicit activities. Others may take a more laissez-faire approach, encouraging innovation and fostering a more supportive environment for cryptocurrency adoption. Pro-crypto candidates typically push for policies that support technological innovation. They may advocate for the classification of Bitcoin as a commodity or currency rather than a security, which would simplify tax and regulatory requirements. Such a stance generally leads to a positive sentiment in the crypto market, as it encourages broader adoption and reduces the fear of government crackdowns. If a candidate running for office proposes lenient and pro-innovation policies, Bitcoin's price often reacts positively. On the other hand, candidates who favor stricter regulation could create a more challenging environment for Bitcoin and other cryptocurrencies. They might introduce policies that subject cryptocurrency exchanges to more rigorous oversight, enforce stricter Know Your Customer (KYC) and anti-money laundering (AML) laws, or even ban certain types of crypto transactions. This regulatory uncertainty can create fear in the market, leading to a drop in Bitcoin's price as investors worry about the future viability of the asset. As the U.S. election approaches, the platforms of the leading candidates regarding crypto regulation will significantly influence market sentiment. Bitcoin's price will likely reflect the market's response to the perceived friendliness or hostility of the candidates' policies toward cryptocurrencies. Investors will pay close attention to any signals regarding future regulatory frameworks, as these could either drive adoption or stifle the growth of Bitcoin and the broader crypto market. 3.2. The role of the SEC in Bitcoin's future. The U.S. Securities and Exchange Commission (SEC) plays a vital role in shaping the future of Bitcoin and the entire cryptocurrency market. The SEC's stance on whether Bitcoin should be classified as a security, commodity, or currency has a direct impact on how the cryptocurrency is regulated. A change in SEC leadership or a shift in its regulatory agenda, which often follows presidential elections, could lead to significant changes in how Bitcoin is treated in the U.S. The SEC has historically taken a cautious approach to cryptocurrencies, focusing on protecting investors from fraudulent schemes. Initial coin offerings, ICOs, in particular, have been a major focus of the SEC's enforcement actions, as many were deemed to be unregistered securities offerings. However, Bitcoin itself has generally been treated more favorably, as the SEC considers it a decentralized asset that does not fall under the same regulatory umbrella as securities. This distinction is crucial for Bitcoin's continued growth and adoption. If the election results in a change in leadership at the SEC, we could see a shift in how Bitcoin is regulated. A more pro-crypto leadership might create clearer guidelines for the industry, reducing uncertainty and promoting institutional investment in Bitcoin. This would likely lead to a price increase as more investors feel confident in the regulatory environment. Conversely, a more aggressive regulatory stance could stifle innovation, limit exchange operations, and reduce Bitcoin's appeal to institutional investors. The SEC's influence on Bitcoin cannot be overstated. Its decisions regarding the classification, trading, and taxation of Bitcoin have a profound effect on the market. As the U.S. election approaches, Bitcoin investors will be watching closely for any indications of regulatory shifts at the SEC, as these could have long-term implications for the price and adoption of Bitcoin. U.S. elections and global crypto adoption. The global impact of U.S. policies on crypto. The U.S. is not only a major player in global politics, but also holds a dominant position in the global financial system. As a result, U.S. policies on cryptocurrency often influence other countries' stances on digital assets. When the U.S. adopts crypto-friendly policies, it can pave the way for other nations to follow suit. Conversely, if the U.S. takes a restrictive approach, it can dampen global enthusiasm for cryptocurrency, especially in countries that rely on the U.S. for financial and economic guidance. Many countries look to the U.S. for regulatory frameworks and economic models, especially when it comes to new technologies like blockchain and cryptocurrency. If the U.S. adopts progressive regulations that encourage innovation, it can create a ripple effect, prompting other nations to develop their own pro-crypto policies. For example, countries with emerging crypto markets, such as South Korea and Japan, might feel more comfortable expanding their own regulations if the U.S. sets a positive precedent. On the other hand, restrictive U.S. policies can have the opposite effect. If the U.S. imposes harsh regulations on Bitcoin and other cryptocurrencies, it could discourage global adoption. Countries that are still formulating their own crypto policies may see U.S. regulation as a sign that cryptocurrencies pose a significant risk, leading them to implement stricter measures. This would slow the global adoption of Bitcoin, potentially causing its price to stagnate or decline. In summary, the U.S. election does not just affect Bitcoin within its borders, it has global ramifications. The policies enacted by the next U.S. president will likely shape the future of cryptocurrency on a worldwide scale. Bitcoin's price will respond not only to domestic regulation, but also to how these policies influence global crypto adoption and the broader international financial system. Bitcoin is a global hedge against U.S. political turmoil. While the U.S. election is primarily a domestic event, its consequences are felt worldwide. Political turmoil in the U.S., especially during election years, can send shockwaves through global markets. Bitcoin, due to its decentralized nature, has become a global hedge against this turmoil. Investors from around the world turn to Bitcoin when they see instability in the U.S. political system, using it as a store of value that is not tied to any one nation or government. The 2020 U.S. election, which took place during the height of the COVID-19 pandemic, is a prime example. The election was marked by widespread uncertainty, contested results, and concerns about the future of the U.S. economy. During this period, Bitcoin's price surged as global investors sought to protect their wealth from the unpredictability of U.S. politics. Bitcoin's appeal as a hedge against political risk became more apparent as traditional markets experienced extreme volatility. The upcoming 2024 election could see a similar dynamic. If the election is contentious, or if there are significant changes in economic or foreign policy, global investors may once again turn to Bitcoin as a safe haven asset. Bitcoin's borderless nature makes it an ideal choice for investors looking to protect their wealth from the impact of U.S. political decisions, particularly in a globalized economy where U.S. policies can influence financial markets worldwide. Ultimately, Bitcoin's role as a hedge against U.S. political turmoil highlights its growing importance in the global financial system. As the world becomes more interconnected, events like the U.S. election have the potential to drive Bitcoin's price higher, especially if investors view it as a reliable store of value amid political uncertainty. 5. The 2024 U.S. election. Key factors affecting Bitcoin prices. Candidate stances on crypto and blockchain technology. In the 2024 U.S. election, the candidates' positions on cryptocurrency and blockchain technology will be crucial in determining Bitcoin's future. Some candidates have already expressed their support for crypto-friendly policies, advocating for the use of blockchain technology to improve government transparency, reduce fraud, and promote innovation. Others, however, remain skeptical of the risks posed by decentralized currencies, particularly regarding their potential for money laundering, fraud, and tax evasion. Pro-crypto candidates may propose policies that support the broader adoption of blockchain technology in both the public and private sectors. They might push for legal frameworks that allow Bitcoin businesses to operate more freely, while also providing clarity on taxation and regulation. If these candidates gain power, Bitcoin's price could experience a significant boost as investors become more confident in the long-term viability of cryptocurrencies in the U.S. Conversely, candidates who view cryptocurrencies with suspicion may advocate for more restrictive regulations. These could include heavier taxes on crypto transactions, stricter KYC/AML requirements for exchanges, or even attempts to curtail the use of cryptocurrencies altogether. Such policies could dampen investor enthusiasm for Bitcoin, leading to price declines as the market reacts to increased regulation. As the 2024 election approaches, it's clear that the candidates' stances on crypto will be a major factor in shaping Bitcoin's price. Investors will be closely watching the political landscape, gauging which candidates are more likely to support the growth of Bitcoin and blockchain technology. The election outcome will have a lasting impact on the regulatory environment for cryptocurrencies and thus on the price of Bitcoin. Taxation policies and their impact on Bitcoin investors. One of the most pressing issues for Bitcoin investors is how taxation policies will be shaped by the outcome of the U.S. election. Taxation on cryptocurrency transactions, capital gains, and mining operations can significantly affect how attractive Bitcoin remains as an investment. Some candidates may propose favorable tax treatments for cryptocurrency, while others may seek to impose higher taxes on crypto-related activities, which could deter new investors. In the U.S., Bitcoin is currently taxed as property, meaning that each time it is sold or exchanged, it triggers a taxable event. This can make it cumbersome for everyday transactions and complicate the process of using Bitcoin for payments. If a pro-crypto candidate were to win the election, they might advocate for simplifying these tax rules, potentially exempting smaller transactions from capital gains taxes. This would make Bitcoin more practical as a medium of exchange and could lead to increased usage and a corresponding rise in its price. On the other hand, candidates who are less favorable toward Bitcoin might propose higher taxes on crypto trading or introduce new regulations that increase the tax burden on investors. For example, they might push for more stringent reporting requirements, making it harder for investors to manage their tax obligations. Such policies could dampen enthusiasm for Bitcoin as an investment, leading to a reduction in demand and a decline in price. Ultimately, taxation policies will play a key role in determining Bitcoin's future in the U.S. The outcome of the 2024 election will shape how Bitcoin is taxed, either encouraging its adoption as a mainstream asset or limiting its appeal through heavy taxation. Investors will be closely monitoring the candidates' positions on this issue, as it will directly impact their bottom line and the overall demand for Bitcoin in the market. Economic policies and their ripple effect on Bitcoin. The broader economic policies advocated by the presidential candidates also have significant implications for Bitcoin's future. Fiscal policies that influence inflation, interest rates, and government spending can directly affect the value of Bitcoin, as many investors see it as a hedge against traditional financial systems. The U.S. economy, as the world's largest, plays a pivotal role in determining global financial trends, and the policies that emerge from the 2024 election will have ripple effects not just on the U.S. dollar but also on Bitcoin and other cryptocurrencies. A candidate who advocates for increased government spending and stimulus programs, for example, could inadvertently drive inflation. During times of inflationary pressure, Bitcoin is often seen as a store of value, akin to digital gold. Investors flock to it as a hedge against the devaluation of fiat currencies, particularly the US dollar. As a result, inflationary economic policies could lead to a surge in Bitcoin's price as investors seek refuge in decentralized assets not tied to government control. Conversely, a candidate pushing for tight monetary policies and fiscal conservatism could lead to a stronger US dollar, which might reduce the appeal of Bitcoin. If traditional assets like bonds and savings accounts become more attractive due to higher interest rates, Bitcoin could see a drop in demand as investors shift their capital to safer, income-generating investments. This could result in downward pressure on Bitcoin's price, particularly if institutional investors pivot away from riskier assets. The 2024 election will likely serve as a catalyst for either inflationary or deflationary policies, depending on the winning candidate's economic agenda. As these policies take shape, Bitcoin's price will fluctuate in response to the broader economic conditions they create. Investors will need to keep a close eye on the candidate's fiscal proposals, as these will play a critical role in shaping Bitcoin's market dynamics in the years following the election. The role of the Federal Reserve and its impact on Bitcoin. In addition to the economic policies of the presidential candidates, the U.S. Federal Reserve plays a key role in shaping the macroeconomic landscape that influences Bitcoin's price. The Federal Reserve's decisions on interest rates, monetary policy, and quantitative easing have a profound impact on the value of both traditional and digital assets. The outcome of the 2024 election could shift the balance of power in the Federal Reserve, potentially leading to significant changes in its approach to managing the economy. A pro-crypto administration might appoint Federal Reserve officials who are more open to the idea of digital currencies, perhaps even exploring the integration of blockchain technology into the traditional financial system. Such appointments could create a more favorable environment for Bitcoin, as the Federal Reserve's policies would likely be more accommodating to the growth of the cryptocurrency market. Lower interest rates and expansive monetary policies, for instance, tend to weaken the dollar, prompting investors to seek alternative stores of value like Bitcoin. On the other hand, an administration that prioritizes traditional financial systems and is wary of cryptocurrencies could appoint officials who take a more conservative approach. They might push for tighter monetary policies and a stronger regulatory framework around digital assets, creating challenges for Bitcoin's growth. Higher interest rates could strengthen the U.S. dollar, reducing Bitcoin's attractiveness as an inflation hedge and leading to a decline in its price as investors shift toward more conventional assets. Ultimately, the Federal Reserve's actions in the post-election period will be closely watched by Bitcoin investors. Any significant changes in leadership or policy direction could lead to volatility in the cryptocurrency market as the interplay between monetary policy and digital assets continues to evolve. The 2024 election will not only determine the future of U.S. economic policy but also set the tone for how Bitcoin is viewed within the broader financial system. As the 2024 U.S. election approaches, the stakes for Bitcoin have never been higher. With candidates presenting vastly different views on the role of cryptocurrencies in the financial system, the election's outcome will have a profound impact on Bitcoin's price, regulatory environment, and adoption. Investors, businesses, and the broader cryptocurrency community will be closely monitoring the election to see which policies emerge and how they will shape the future of Bitcoin in the United States. From regulatory uncertainty to economic policies that drive inflation, the factors influencing Bitcoin's price are numerous and complex. The 2024 election will serve as a critical turning point for the cryptocurrency, determining whether it continues to thrive as a decentralized asset or faces new challenges in a more restrictive regulatory environment. In the end, Bitcoin's future will depend on a combination of political, economic, and technological factors. The U.S. election is just one piece of the puzzle, but it will undoubtedly play a key role in shaping the trajectory of Bitcoin in the coming years. Investors and enthusiasts alike will need to stay informed and adapt to the changing landscape as Bitcoin continues to evolve in the post-election world. At last, don't forget to subscribe our channel.